Hi, I'm Rocky Lalvani, financial coach from richersoul.com. If you have not listened to video 1 about why you need to create your cash flow statement, you may want to go back and listen to that first. There's also another video about creating your balance sheet. You can download a cash flow statement that we are working with at bit.do/rs-cashflows so that you can follow along and do yours during the recording. We are going to do our best to capture our spending. One way to find all these amounts is to go to your bank and credit card websites and download the last 3 months of data into Excel. As you can see, this is an example from one of my accounts. You're looking for the export function somewhere on the website. In this case, it gave me a box to show me different ways that I could export it. And what I'm looking for is CSV. This allows for editing in spreadsheets like Excel. Once you download it, you'll need to categorize the spending and add it up by category. If you don't have access to that, you can also start tracking your spending going forward. Don't forget to add in expenses that may happen infrequently, such as an insurance bill or other annual bills. Let's start with your paycheck. Put in the amount of your paycheck and then put in how many times a year it is. So in this case, 6/9. And this is paid 24 times a year, which means you're paid generally on the 15th and the 30th. Next, we're going to track all the money that disappears before you even get your check. For me, taxes are my number one expense, and that's why I want to pay attention to them. In this part, we'll take the numbers directly from our check and put them down. You can skip pennies or items that are only a few dollars. So we have federal tax, Social Security, FICA, state tax, there's a local tax, and there's unemployment. Next up, all your benefits. While you are here, just remember, most employers spend a lot of money on benefits, and you're not seeing the true cost of health care. It's also important to know these numbers should you want to compare jobs. If you don't have disability insurance, that's something very important to consider, along with life insurance to protect your family. It's usually better not to have your life insurance tied to your employment, because if you get cancer and are sick and you lose your job, it's not going to be there to protect you. Let's go ahead and put in our benefits. So we have medical, dental, disability. There's no life insurance. If you have parking through work or something else like that, or any other types of things, there's that vision plan. And that is it for our, oh, there's the life insurance over there. And we'll put the auto under parking. And again, you're just trying to get the numbers down. We're not looking for perfection here. Next up is our work-related automated savings. One of the fastest ways to increase your savings rate and create financial freedom. Take advantage of these plans, especially when your employer matches your contribution, as it's free money. A simple way to increase your savings rate is to take a simple baby step of increasing your 401k contribution by 1%. You'll barely notice it in your paycheck, and you can also increase the rate when you get a raise. So let's go ahead and we're going to put in our 401k. And we do not have any of these other savings plans through work. And if we look down here at the bottom, the 2488 matches up with 2487. So we know we've got it all correct. Now, once you've done this, you're going to repeat the process down here for your second paycheck if you have a second job, or for your spouse, and we'll use the exact same process that we used above. Once you've completed your second paycheck, you can scroll down to the next section, which is other income you may have. Business income, rental income, You can net this out if you want, yearly bonuses that you may get from work. And again, you probably want to net those out of taxes and deductions so that it's the correct amount. So I'm just going to put in a yearly bonus here. You might get a Christmas bonus or something. And then if you get any stock awards from work, anything like that, you could put them in there as well. After this, we're going to look at expenses, and you'll see this is calculated out the total income for the year. So we scroll down, and first we're going to start with our home number. Again, it's okay to round these out to make it easier. You may also skip certain categories if you spend in them. Remember not to double count something like life insurance if it's already coming out of your paycheck. For utilities, you can use an average. If you call your utility company or check their websites, you can find that number. So let's look at our home-related expenses. And again, to make this easier, if your mortgage includes your real estate and your taxes, you can just put it all as one number. You don't need to split them out unless you want to. Then we're going to add in our utilities. And again, we've got maintenance and repair costs. You can guess at what this is going to be for the year. So let's say if you think you're going to spend about $2,500 for the year, that's about $200 a month. And that gives us a pretty good idea of what our housing cost looks like. Next up is auto. If we have a monthly payment on a loan, auto insurance, registration fees. Again, this is a monthly number, so make sure you divide it out. And then how much you spend on gas every month. And if you have car maintenance and, again, you're just guessing at a number. You always need tires or something else. And again, this is a monthly number. Now we scroll down and we start looking at our living expenses. Remember, you can download this from your credit card and bank statements, or you can start tracking going forward. This category creates a lot of surprises as people don't realize how much eating out, food, and entertainment are really costing them. You can find these monthly memberships for places that you don't even use. So that's why it's important to actually go through your credit card bills and your bank statements to see where your money is going. And you want to tie these together to make sure that they equal out. So let's go ahead and put those numbers in. Gym membership and Netflix membership. And again, this is monthly amount. So how much do you spend on clothes a month? If you do any kind of cosmetics and stuff. And then there's always invariably medical bills. And then this is vacation. So again, we're going to take our vacation cost for the year, divide it by 12, and come up with a number per month. And now we move on to kids' expenses. They get expensive, so don't forget to keep track of what you're spending on them. And if you have to pay for babysitting for them, toys, games, sports can get very expensive, so don't forget to put that in as well. And then any other kids' expenses. And then lastly, we're looking at charity and gifts. So Christmas presents, all of that stuff goes down in here as well. Birthday gifts. And then that gives us our totals up to there. And then the last thing we're looking at is our obligations, which is basically those monthly amounts that we have to pay on loans. And for the credit card, you're looking at if you have a monthly payment because you haven't paid in full every month. And quite frankly, you should be paying in full every month. Don't forget we put the auto loan up top, so don't put it back down here again. And then if you have any alimony, other child support, or other obligations on a monthly basis. If there's any other monthly spending that you have that we haven't captured anywhere else, then go ahead and put it in the other savings part. And then here's where we'll track our savings. So if you've got some sort of a savings plan that's going on that takes out monthly, if you're saving for college or some other types of things, you can put that savings in here as well. And then once you're done with all of this, you will have your results. It's going to show us our total net income per month, per year, what our expenses are, what our current savings rate is, and then the excess that's either left over or is negative. So in this case, they are actually living within their means and they've got excess cash left over at the end of the month to be able to do other things or to increase their savings rates. The bigger the gap that you can create between savings and spendings, the faster you reach financial independence. During the balance show video, we showed you how to go to a retirement calculator. So in that retirement calculator, you could use this $350 or $4,200 a year for current savings and add that in. And since we have such a large balance left over here of $9,000, almost $9,500, we could up our savings rate to see how fast we could reach financial independence. Now, go look at your numbers and see if you are happy with the flow of your money. Is there something you want to change? Are you happy with where your money is spending? You need to give every dollar a job. And this is where you see the jobs that your dollars are doing and whether or not you're happy with the results you have. Once you have this all written out, you can start deciding where you want to cut spending and where you want to increase spending. Because that's fine too. If you decide you want to go out to eat more, then you can do that because we have excess savings here. So we have the ability to increase our lifestyle should we make that choice. Thanks for listening. If you have any questions, please email me. It's Rocky@richardsoul.com. Happy to hear from you. Have a great day.